everyone. Welcome back to the Bank Customer Experience Podcast. I'm your host, Bradley Cooper, and today I'm joined by two old friends. I'm joined by Jean-Pierre Lacroix, who is the president of SLD, and Marbue Brown, who is the founder of the Customer Obsession Advantage. And today we're talking about community banking. So great to have you guys on.
Well, thank you for having us.
Yes,
Excellent.
indeed. Thank you for having us.
Yeah, so we really want to talk about how community banking is changing and evolving, both with the trends and with the times and technology. So, question for both of you all: how do you see community banking adjusting to changing trends?
Well, first of all, they are in the crosshairs of a lot of larger institutions and credit unions, and so what we're seeing is since 2024 or sorry 2004 to now. There is 3,800 fewer financial institutions. A lot of those were community banks that kind of disappeared. And I want to make the distinction that we're talking about community banking, which includes any financial institution that is operating in a community versus community banks, which are a segment of the banking industry. But there's a correlation between the two.
Sure.
Yep.
Sure.
Well, let me pick up on what JP was saying is because, I would say the community banks themselves are not necessarily faring very well in terms of the adjusting to the changing trends. And here's what I mean by that. Look, previously, the competitive advantage that these banks had was that they were embedded in the communities that they serve, and they still are. But, there was all this familiarity with the people who ran the banks, right? And, they were friends and family members. These folks have a vested interest in the communities that they're serving and everything like that. And that was kind of the edge, that they had. They were supporting the hopes and dreams and aspirations of people in those communities. And to some extent, all these things are still true, but meanwhile, national and regional banks have taken steps to kind of erase those advantages, right? And so they've done that by prioritizing connections within, community connections in those communities by doing a bunch of different things that have kind of also brought them to being embedded in the community. So it ranges from things like investments in those communities to updating their branch decor and stuff like that to reflect the communities, or participating in local community activities from, volunteering and sponsoring, local, teams and stuff like that, local baseball or local soccer. So like the national and regional banks have been doing these kinds of things that like strengthen their connections to the community. And so the natural advantage that community banks had is kind of being erased. And also, I might say, even recruiting within the communities and all of those kinds of things. So now the people who are working there or working in those national banks and their branches and stuff like that are not necessarily people coming from other places, but it's people from those same communities. So it's friends and family members and all of those kinds of things. And that's creating, some serious challenges for community banks to be able to keep pace.
Yeah, and to build on Marbue, what we did this study and what we discovered, a big insight was that the definition of community banking is confusing. When you look at the large institutions being more actively involved in the communities and the credit unions, and then you've got digital platforms and fintechs. The reality is that definition of community banking is shifting. But the sad thing is when we looked at what is driving loyalty, right? What is driving loyalty for institutions? What the study clearly identified, the key insight is that community commitment by a financial institution is a key driver of growth. Things like products and services, customer satisfaction, NPS scores. You would think those things were drivers of growth. They're actually attrition mitigators. These are factors that will reduce the churn within a bank's customer base, but it's not driving growth. What's driving growth is the level of financial advice that those institutions are providing, and secondly, their commitment to the community. And that's the big insight. And so I think the big
Interesting.
players in the market are discovering the power of community banking, and as such are putting a lot of effort. Why would JP Morgan Chase and some of the other large institutions make those large commitments to community banking? Because they're seeing the returns, they're seeing the impact they're having from a market share and customer loyalty by committing to the community. That's pushing the smaller players out. And so there's got to be a recalibration of community banking in the marketplace if the smaller players, the regional players, want to stay relevant in the marketplace.
Sure. That's a really great point. So I wanted to lean into that thing you mentioned about providing that financial advice. So what's the best techniques for training employees to meet those needs and provide that advice?
Well, here's my take on it. Look, the best way for these banks to train their employees is basically to incentivize them to shop in their own closet. Okay. And what I mean by that is that they have to consume their employer's own products and services so that they become experts on them. Look, can you imagine going into a bank and they're trying to get you to use the app, but the person who's trying to get you to use, their mobile app doesn't know how to use that mobile app herself or himself, right? How about somebody who's trying to get you to get an auto loan from the bank, but I don't know anything about the process of getting an auto loan from that bank, right? Or I don't know anything about the process of getting a mortgage from that bank. Okay. And so these things are almost counterintuitive. And I'm not saying that they can consume every product, but to the extent that these folks have incentives that enable them to become experts on the products and services that their employer provides, okay, that would be one of the ways that you would train them. Let me tell you, with the rise of AI, there's also the opportunity to use simulations to get employees to familiarize themselves with the things that they actually want to talk to these customers about, right? And now so many scenarios can be simulated. And look, before, if you wanted to get somebody to role play, you might have to pull a second or a third person. And I still think role playing is a good way to get people to familiarize themselves with this. But now with AI, you don't necessarily have to pull people off of what they're doing. You can simulate these experiences. And so those are a couple of ways that I think would be, super helpful to get these folks to be trained, on some of the things they need to do for their customers as, the landscape is shifting.
Yeah, I think if you went at a higher level and looked at the dynamics and you look at Europe versus North America, Europe is way ahead when it comes to that shift from transaction to financial advice. And what are the things that enabled them to make that migration? Obviously Marbue identified one of the key factors is the training, but another key factor is reducing the transactional engagement customers have with humans in the branch. And so in the majority of financial institutions in Europe, the ATM transaction happening in the branch is at 100%. So the majority of financial transactions, the stuff that's low margin for financial institutions, are happening on the technology platforms, mobile, in the branch, online. That's freeing up the staff to fully engage. They're not looking at the queue line anymore and having to accelerate that relationship because they don't want to have the next customer waiting, number one. Number two is they've committed to queuing systems. North America have been fighting this idea of Qmatic or other queuing platforms. They've been fighting it, thinking, well, customers think they're a number. No, actually, customers want to sit down and relax, knowing that they're in sequence for their service. It also allows the bank to do a triage of what those customer needs are so that they can then queue up the right individual to manage those customer needs. And that's another key factor. And the third is back to the community. is that in our future of advice study that we did in 2023, what we found out was, what delivers credible advice from a financial institution? It's that individual being visible in the marketplace, being visible, those advisors being visible in the marketplace, being part of the community, because being part of the community builds trust, it builds recognition. And those are key factors in being able to share advice, financial advice. And then the last thing is we're a product driven mentality when it comes to banking. We're measured based
Absolutely.
on selling products. And
Mhm.
that shift needs to happen to selling solutions for the customers.
Mm.
And until those metrics shift in the compensation that Marbue's talking about happens, the mindset will still be transaction and selling products. So I think those are the key factors that are underlying the big shift and the barriers, I call them headwinds, to achieving that.
Right.
Yeah, let
There's
me say
certain.
one more
Oh, go ahead.
thing. Let me piggyback on one more thing from what JP said, because the key thing too about preparing people to deliver advice is to have a good and clear understanding of what constitutes advice and what are the different kinds of advice that people are looking for when they come into when they come into the branch, or even if that advice is delivered through a digital channel, right? And so it ranges from advice about what kind of capabilities are available to me, as a customer of this financial institution, to advice about how to take advantage of those capabilities. So, helping somebody learn how to use the app, and helping them to learn how to do those transactions that they would have done in a branch but they can do otherwise. That's advice, right? you know Giving them the capability to like utilize some of these other products and services that the bank has. Many times people don't even know that their financial institutions have some of those things available to them. That's advice. And then those things can actually help them to make the most of their money, right? And if you do things that help me to use my money better, okay, then I see that as advice. So I think that's very critical. Having people understand what kinds of advice, what constitutes advice for the customers, and then getting them to be familiarized with those types of advice so they can give them, and also understanding that the moment you start moving into the wealth management space, that's an advice of a different caliber that your typical banker is not eligible to give. And they should also be able to have some sort of a referral system or something like that to get them to the people who can give them those kinds of advice, right? And that's the other
Sure.
thing that people need to understand.
But it comes back to, if the institutions, the industry has been known for selling products, there's a reluctance by customers to accept advice. I remember doing this huge project for one of the largest financial institutions on wealth, and we developed this wealth strategy for them. And what we found out is that consumers did not want to be sold wealth products and services because they felt they were being sold on the purpose of commissions, or it was self-interest of the financial institution, not their benefit. It's only when we are able to identify that the key factor to retirement, the key factor of the financial impact of retirement is your health, which is not about banking, is your health. And to talk about things about your health and how health can impact significantly your ability to enjoy your retirement financially and physically. Did the light go on? And did the consumers accept the advice they're getting from their wealth advisors? But that would require a mind shift and making a statement about not selling products, but selling solutions, holistic solutions that talk to, Marbue's point, the customer's needs and pain points.
I think that's a fantastic point. And I was curious if there are any other demographics that you can speak of, Jean-Pierre, about that. Like, are there some other demographics that would work with to be able to accept advice, like with Gen Z or millennials?
It's interesting, when we looked at, branch transactions and looking at branch visits in our studies, people say, well, millennials don't go to the branch and Gen Zs don't go to the branch. They're
Hmm.
all mobile. That's BS. That's
Yep.
absolutely not
Not
true,
right.
Mm,
not right. And
right.
whoever says that they're trying to sell a digital platform. The reality is this: their purpose to visit the branch is different than boomers. Boomers, it's relationship and transactions. But the younger generations are looking for financial advice and financial security and helping plan for their financial future. They have a high level of anxiety. They can't buy homes, right? They're paying off their student loans, they're debt ridden. Anybody that is able to share light on solving those problems, they're gonna
Exactly.
they're gonna they're gonna be open to advice. And if you look at some of the institutions, they're putting a lot of effort at targeting this segment of the younger segment of the population, clearly understanding their pain points and providing advice to solve it. And again, it's back to Marbue's point. If you're solving a customer's need state, irrespective of the age, they're gonna pay attention to what you're saying. And for them, the branch experience, we ask the question, what's the best place for financial advice? Online, mobile, 80% said the branch. I want that advice in a physical environment with real people. I don't want to
Yeah.
deal with an online advisor or a mobile
Hmm.
app or an AI, automated process. They want to meet with real people.
Yeah. And the thing is that, these folks are savvy enough about online sources enough to know that not all of the things that they read online are true, right? And so being able to engage with people that they perceive to be as experts, right? And being able to engage with those people in person, that gives another level of credibility, right? And so now that said, there's still this matter of earning the right to give advice. And so that's why, the institutions that have the kind of reputation that people can trust these institutions, and so that they know that the advice that they're confident that the kind of folks who are giving the advice and the type of advice that they're going to get is going to be beneficial to them. Well, then they're ready to go and tap into that, right? And so using that opportunity for that physical interaction. And to be quite frank, I mean, coming out of the pandemic, it changed some perceptions about, you know, uh, the level of physical interaction, and how that might be beneficial. And so while you still hear from a lot of people that they want to be able to work from home, there are certain things that they don't necessarily want to try to do from home, and this is one of them, where they'd rather meet in person, make sure it's real, and all of that kind of thing, to make the most of it, right? So yeah.
Yeah, I think that gives us a lot of really great information and was a really great conversation. Is there anything you'd like to add?
Yeah, I think that the financial industry is going through a major transformation. I don't think I'm
Hmm.
saying anything new here. But and for me, what's the exciting part of that is they've rediscovered the power of people, right?
Yes.
For the
Mhm.
last 10 years, it was all about digital transformation, the newest shiny toy, the $1 billion spending on, making it seamless. But we know that if you push consumers to an online only platform, they're the least loyal of your customers. The customers who use all your channels, their channels are the most loyal. So it's great to see financial institutions rediscovering the power of humans and rediscovering the impact that relationship between the the associates, the in branch individuals have with their customers. And so for me that's exciting to see. It's long overdue. We 10 years ago said you need to humanize banking, and people laughed at us and said, no, it's all about digital transformation. No, it isn't about digital transformation. That is just a process. It's not a relationship. Anyways, that would be the insight I'd like to share.
And Marbu?
you know when people said, when a number of companies started adopting this mantra that they wanted to enable customers to bank when, where, and how they want, I think a lot of people looked at that almost like it was a cliche. Okay, and to be quite frank, whether in fact, a lot of folks who have said it have actually been committed to it, is a little suspect, right? But for the institutions that have been committed, and have demonstrated that commitment in tangible ways, it's paying off big time because customers do want to be able to bank when, where, and how they want, and that means that they've got to be able to access the bank through a variety of channels, right? And the fact is that even when you do that, folks have to understand that you have to have as much channel parity as possible. Because when there's not channel parity, what happens is that people migrate to the channel that will meet their needs the most. And if that's an in-person one, that's where they're going to be. If it's a digital one, that's where they're going to be. The thing is, it tends to be the in-person one more often than the digital one. So, this whole notion of being able to bank when, where, and how they want, it's got to be real.
I want to sort of build
Exactly.
on one last comment. What Marbue said is that in our study, we asked, we did a study on seamless banking. What does that mean for customers? What does it mean for bankers? Customers said seamless banking is the ability of banking when and where I want, with the caveat that at each of those moments, I want to have access to a real person. And that's the caveat. That seamless isn't just about technology and integration technology. It's about the ability of interacting with a human being at any one of those moments. And that's the important point.
Yep. Well, thank you so much, Jean-Pierre Marbue. This was a fantastic conversation about community banking. Really appreciate all of your insights. Thank you so much.
Thank you.
Thanks for having us.